So CTOS is down about 42% at its all-time, and if you look at its year-to-date, it is down about 25%. Now, before you actually buy CTOS, I highly recommend you guys to watch this video and make sure to watch it until the end.
Too busy to find stock ideas? Check out FIRL Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
So what happened to CTOS was their latest two quarterlies didn't really show much of an exciting in terms of profit growth. You can see that for Q1 2025, the profits actually dropped from 20.8 million last year to about 14.4 million. And if you look at their Q2, it also dropped about like 15 to 20% from 25.5 million in the previous quarter to 21.2 million. And if you analyze this financial year 2025 number, it doesn't seem to be actually making more profits compared to the 2 years, which is why the market punished their share price. So let's look deep into their Q1 financial year 2025's number. So over here, we can see over here, despite their revenue for Malaysia grew about 4.3% and also their international side grew about 21.1%, the segment profit for Malaysia actually fell about 29.3%. Now, they didn't really give any much of a clue why did they actually drop, other than just a higher operational expenditure. And if you look at in terms of their overall income statements, right, the cost of sales actually increased about 18%, and then their selling and marketing expenses went up 49%, and their admin expenses went up about 21%. So clearly you can see that the number one culprit over here, which is selling and marketing expenses, didn't really pay off, which could means that they spent a lot of money in terms of advertising, promotion, their services, but that didn't really translate into more profits or at least more sales, which could actually cover the cost of marketing. Let's take a look at some of the comments by RHB and also BIMB. You can see that their profits were actually dropped by the slower consumption from local key accounts and commercial segments with some delays in new projects, and also this further negatively impacted by the underperforming investments and also the increase in various marketing and development costs. So all of this tells you is that whatever they invested in terms of marketing and also development, that actually didn't translate into higher production returns and also in this case profits. And you also can see on the right hand side over here, currently, there's no CEO spearheading this company. And they also did mention that, the CEO search is still remaining challenging. The good thing is that they actually managed to save some costs in terms of remuneration, because previously they paid about 6.5 million to the CEO and also the CTO. So right now, there is an absence with these two major roles. So they managed to save about 5% of the profits for financial year 2025. So if you guys can recall, on the 25th of April 2025, the CEO, which is Eric Hamburger, he stepped down on September after they actually announced a very, very bad Q1 net profit. And the reason why he is leaving is because he wants to explore a new career opportunities. He also did add that, the several product updates and new solutions are set for launch in 2025, reinforcing its commitment to continuous improvement. So which means is that he did give some sort of instructions. He did, initiate some sort of spending for development, and he thought that these new solutions can help to improve productivity and also to make more profit. But clearly for Q1's number, that didn't really translate into some sort of meaningful contribution, which I think that led to his resignation. And you also can see that some of these comments, which is quite pessimistic by the research house. So at least 3 research houses actually downgraded their recommendations for CTOS. And also they did say that, customers could lower their frequency of use of CTOS products and solutions amid softening economic conditions in the near term. And also CTOS did guided that they will be making less than 100 million in terms of profit for financial year 2025. The analysts expect them to make about 100 million. But I think CTOS, they did project, they say it's going to be about 87.5 million over here. And they also did guided, and they say that there's going to be a delay in projects conversion due to extended sales cycle, a strategic shift to exit lower yielding projects, and a change in several customer spending patterns. So all this tells you is that business is not doing so well at the moment, obviously because of tariff, right? So most likely some of these customers will start to cut down in terms of their spending whether is it for CTOS or maybe is it for other services, that will actually result a lower revenue contribution for CTOS for the coming quarterlies. And also on top of that, they mentioned something about the shift in exit for low yielding projects. So which means is that probably they did try to introduce some sort of product line for CTOS, but that didn't really work out well. And probably they're just gonna be putting in money into segments that is profitable, or at least the product lines that is profitable. And here are some of the prospects about CTOS. You can see over here, CTOS did mention they're gonna be doing some sort of cost structure optimization, and they're going to be exiting the less profitable business and also expand their footprint in ASEAN. So I'm not sure whether this cost structure means that they're going to be laying off more people. Hopefully not, because so far we only have like 2 people who's getting laid off, which is, or actually they got laid off, which is the CEO and also the CTO. So probably they're going to be doing some sort of like headcount reduction, but we shall see in the next coming quarterlies whether they did actually do that. But nevertheless, one of the research house, which is Hong Leong Investment Bank, they did say that, you know what, despite the poor results for Q2, they did say that the decline in share price actually, shows some sort of interesting bargain. And they think that the risk reward right now is about pretty much of a balance. And in their opinion, they think that the valuation is quite compelling. And you also can see that, you know what, CTOS also aims to deepen its penetration into large corporate segment, which is where they are lagging. So hopefully when they do manage to penetrate this segment, it can actually help to contribute into their revenue and also increase their profits. And on top of that, you also can see fund houses like Kumpulan Wang Prasaran Kuap. You can see Aberdeen. You also can see even Credo themselves, who owns about 19.7%. Right now, they own about 19.8%. As well as CTOS, they themselves, they are all buying back the company recently. So I believe that they are buying at about 20 to 23 times forward price to earnings ratio for financial year 2025. So they think that at current valuation, it is quite attractive to them, and hence why they are continuously been buying back. So before considering CTOS, make sure you guys, check out a few of these points that we're going to be sharing you guys. So number one over here, which is whether AI will disrupt the credit reporting business, because banks are the one that is buying a lot of this data from CTOS. So what if banks start to use like AI to organize and collect all of these small data or big data from their customer profile to track and monitor, or maybe even to analyze their customers' credit health? Would that actually leads to lesser, consumption in terms of buying from CTOS? But on the flip side, there's also an argument that says that, banks cannot really collect data from another bank because of PDPA and also some of the credit reporting law. They need to have license to have that. Not only just like other banks, but they also need to like collect data from, from the utility bills, their telco, the buy now, pay later, or the other alternative credit data sources. So that could be some sort of like restrictions that banks couldn't do everything for themselves, at least in terms of like making their own credit reporting business segment under them using AI. And so this tells you that the relevancy and sustainability for CTOS business, it is still here to stay for at least a few more years until maybe the regulation or the government decide to change this rule. So far, their credit reporting business is still going to be doing pretty much fine. But I think CTOS, what they need to do or what they need to incorporate is to use some sort of like AI to enhance in terms of their credit collecting, or maybe even scrutinizing the data, make it more faster, make it more efficient, make it more real time, so that their customers, which is the banks, can enjoy these kind of like better benefits, which is faster and more efficient and also more accurate. Okay, the second point over here, it is that there's no captain that is currently steering the wheel, which creates a lot of uncertainty in this company. And there's also a reason why most of the research house are actually pretty much of bearish in this company. But nevertheless, I believe there's a shadow captain that is kind of like leading this company, which is Credo. So hopefully Credo can actually, contribute some ideas that can actually help to improve their profits. If not, they need to quickly find a new CEO and CTO to, start to lead the company. And the third point over here is whether at this price point, is it a bargain? I mean, at current price point, at 90 cents is currently trading at about 23 times price to earnings ratio if we use the profit guidance by Credo. Whether is this cheap for a credit reporting business? Well, it does seems quite attractive because number one, they are a monopoly business. They don't really have much of a competitor in Malaysia. And number two, it is also a growing business because not only they are growing their business in Malaysia, they are also also trying to increase their penetration or footprint in ASEAN, which is in Thailand, Philippines, or hopefully maybe in Indonesia. Not to mention, they're also doing a lot of M&A, which is they're acquiring all of these data companies like RAM, which is the recent one, and also Juries, which actually help to improve or at least increase a lot of the profits for CTOS. So if let's say they manage to, acquire more good companies and good valuation, I think at this current price point, it does seems a little bit attractive in my opinion, which is also the reason why CTOS has been buying back, Quap has been buying back, as well as Aberdeen. And yeah, I mean, whether you should join them or not, well, leave it into your own judgment. And last but not least, is also actually a risk for CTOS is whether Credo will exit, because Credo is known to actually exit once they manage to unlock the full potential of this company. So for example, like GHL is one of the prime example that they have exited. Mr. DIY also, I believe like it was like few days ago, they fully exited. EcoShop, once this company listed at about 30 times price to earnings ratio, they also pare down their stakes a lot, I believe from about like 10% to about 1 to 2%. So they are looking to actually milk terms of this sky high valuation. And right now, they are owning about 19.8% of CTOS. So assuming CTOS managed to regain their footing, they managed to improve their profit, and let's say the valuation is trading at multiples that they like, I believe most likely Credo will also be exiting CTOS, which is probably pretty soon, maybe next year or maybe even 2 years later. But what do you guys think? Let me know in the comments. Before you guys go, here is the quick update for July 2025's performance for FIRL Pro. So far, all three portfolios are growing, and for August 2025, it is also at a positive return. If I can recall, FIRL Pro Malaysia right now is about 36%, FIRL Pro Global is about 14 to 15%, the Boring portfolio is about 4 to 5%. And each of these portfolios serve their own, particular niche and purposes. So for Malaysia portfolio, we only cover compounders that we find in the Malaysia scene. For global portfolio, it is where we find compounders, whether is it in the US, Hong Kong, China, Singapore, Vietnam. So we will initiate our positions over there. And for the Boring portfolio, it is if you like dividends, if you like cash flow, this is where you want to check out this portfolio, because we only initiate companies that gives out a very, very high dividend yield, at least a minimum 6% dividend yield, and where companies can actually distribute it out consistently every single year. So if you're interested to know what are the names behind all of the stocks that is initiated in this portfolio, make sure to check out the FIRL Pro program. We have a 10% coupon. The links will be in the description and comments. But if you are still hesitating, you want to know how we do our write-ups, well, we have a free sample for you over here. So inside this free sample, 2 reports we have shared with you guys. Number 1, it is Stellium, which is over here. We actually bought it and initiated at around late of 2022 or early 2023. And we sold it at around like late 2024. And we make about like a 50 to 60% gain over there. And not to mention, we also did share another write-ups, which is about KGB. And currently KGB is also doing pretty well if you look at the current share price. And not just 2 write-ups, we also do share with you guys 3 management notes over there. It is where we actually share special insights or exclusive insights that might not be publicly available. Why is this exclusive? Is because it's actually our meetings with CEOs, probably on a one-on-one, or we meet industry experts about the company that they are currently in, just to get some, information that might not be available in the annual report. And on top of that, you also get a video on SIB, which is about modes. So if you want to get to know about FIRL Pro, you want to get to know about SIB, you can check out our free sample. The links will be in the description and comments. And as always, make sure to like, comment, and subscribe, and stay tuned for more. See you guys next week.